Coinbase sues the SEC, Chamath calls crypto a dead asset, and SEC Chair Gary Gensler trips up once more in the definition between a security and a commodity. It's certainly been a very interesting week in the crypto markets as the Bitcoin rally starts to come to a screeching halt, and Coinbase, for the first time in its 12-year history, sues a federal regulator. And that news came after Coinbase announced that they got permits to operate in the Bermuda state, meaning they can incorporate their business outside of the US for the very first time and do things that they probably could not legally conduct within the country. Whether you consider this bullish, bearish, or neutral for crypto or Coinbase stock, that is for up to you to decide. Because right now we have very little clarity on where the economic situation of the US is going to head, and also what the SEC itself is trying to do. So instead, let's break down what the SEC has said, what Coinbase is trying to do, to understand in our best possible scenario how this will affect the future of cryptocurrencies. But as usual, folks, make sure to drop me a thumbs up and hit the subscribe button if you haven't already. So to start things off, let's address some of the drama that's been going on around the crypto industry, where Chamath Palihapitiya, who was known as the SPAC king of 2021, and who once thought Bitcoin could hit $200,000, is now saying that crypto is dead in America. Now, I do have to give him some benefit of the doubt because this was clipped out of his All In podcast, where he was explaining what's been going on in the crypto industry specifically for the past 12 months. And as we clearly know, the NFT industry has collapsed and people have lost quite a bit of confidence in the ability of crypto to go mainstream. But as investors and technologists, we understand that there is value on the blockchain and that Bitcoin, Ethereum, and other tokens can provide serious value to the decentralization of the financial system, which, as we've clearly seen over the past couple of months through what's going on with First Republic and SVB, is very important. And if we'll be completely honest about it, what Chamath is actually saying is that US regulators are forcing crypto businesses into a corner with their lack of clarity. He's very adamant to mention the fact that Gensler at some point blamed the banking crisis on cryptocurrencies itself, and after the Wells notice the SEC filed against Coinbase out of a big surprise, it's pretty clear that the government does not want cryptocurrencies to succeed in the short term. And to best understand why that is the case, we need to first understand why Coinbase is suing the SEC and what regulation they're specifically focusing on. As you can see, on Tuesday, Coinbase filed a narrow action lawsuit in federal court to compel the SEC to do one simple thing, which is respond yes or no to Coinbase's pending rule-making petition from 2022, which essentially overguides the guidance for the crypto industry in general. For those that might not be familiar, a narrow action notice is simply an urge for the government official or authority to do its own job. And as we clearly know, the SEC's job is to protect investors and regulate markets. And with the way that they've been dealing with the crypto regulation for the past couple of years and playing ball back and forth, it's pretty clear they're not doing either of them. Because let's be honest, it's one thing for you to have crypto companies conduct fraudulent activity like FTX did in November of last year, but it's a completely another thing when crypto businesses that are startups and taking on investor money from Americans are going under, bankrupt, or being sued by the SEC like Coinbase was just a few months ago because of unclear regulation. The SEC's job is to facilitate innovation and capital formation in US markets. And as we have clearly seen, the crypto industry is becoming one basket of such capital formation. Not only are investors able to make a lot of wealth, but they're actually providing a utility to consumers and businesses that can now take their backs off of the traditional and corrupt banking system in the United States. And for a business like Coinbase, this matters because they deal in the crypto industry firsthand, and it's pretty clear that over the past few months, their business has been negatively affected by what's been going on with the regulatory battle. Year to date, Bitcoin is up around 70%, with Coinbase stock up around 65%. But over the past 1 month, we have seen a significant divergence in the performance of both assets, where Bitcoin is up around 1% and Coinbase is actually down more than 11%. Given the idea that Coinbase's revenue is primarily driven by what Bitcoin does in the short term because of their exchange and trading fees, accounting for more than 50% of the total revenue, this is a really big deal. Because let's be honest, apart from the price volatility of something like Ethereum and Bitcoin, which is solely dedicated to the speculation on trading markets, there is very little comparative risk on the blockchain of Bitcoin. There is near instant settlement, and there are very little intermediaries that can mess up different things. This is the big reason why Silicon Valley Bank went under and depositors lost so much buying power. The government prints money, buys bonds, issues bonds, and then these banks over-leverage their balance sheet to the point where they cannot pay back their depositors because interest rates happen to go up for the first time in 2 years. That, in my opinion, is more unacceptable than Bitcoin falling from, let's say, $60,000 to $20,000. That might be scaring out some investors into thinking crypto is a scam. This would obviously affect a single mother with 2 kids much more than a startup if they're trying to pull money out of their bank account and all of a sudden the bank can't cover their deposit. And so the reality is that in the long term, the US financial system is most likely more riskier than anything crypto looks like to be in the short term. Things can obviously change, but with the way that the CFTC chairman disagrees with the SEC chairman on what Ethereum actually is, it leads me to believe there is a lot of work that needs to be done by federal authorities around cryptocurrencies. Whether or not this happens in the next Bitcoin bull market, or whether or not the government is going to wait for the upcoming election, I don't know. But it's pretty clear that the SEC is purposefully holding back their decision, most likely waiting for an important catalyst to fulfill their demands. And based on the fact that President Biden's new communications director owns around 50 to 100K worth of Bitcoin herself, there are probably some optimistic folks in Capitol Hill that could help with the crypto industry push. As usual, guys, that is just my take on the situation. Let me know your thoughts down in the comment section below, and I will catch you guys in the next one. Take care.